Hello and welcome back to Invest with Sanjeev KMR VGP. In this video, I am going to share with all of you that what is P and EPS. I know that you all are aware with these two terms, but in this video, I am not going to share only the calculation or formula. These all things you can understand from Google or YouTube in other video, but what is special in this video is implementation. After knowing P and EPS, you don't know how to assume the share price. So if you know P and EPS, if you understand, then you should be clarity about the share price. Our share price is going to grow or not. You can understand this thing with the data of EPS and P. So this video is going to game changer for all of you. Without making delay, I'm just sharing my presentation file and screener.in TradingView website and one Excel sheet so that you will get more clarity. This is the disclaimer that I'm not SEBI registered advisor, and this video I'm creating for educational purpose only. If I discuss about any share, it doesn't mean that I'm recommending the share. So now the high EPS, low P. We see sometime that EPS is very high, but still P is low. What is the meaning? If EPS is high and EPS is connected with P, so P should be high. So some surprising truth is what? Before going to next slides, I want to say something about this chart. This is the chart of Asian Paint, and in screener.in website, you can see here that EPS is low here. This is the EPS, this blue. You can understand, you can search on screener.in. If you search any company, you will get it. In chart, you will get P ratio. This is price. You can select P ratio. This is EPS. If I unselect, understand, this is EPS. This was EPS, and this line is for P line. So you can understand from this chart that EPS, when EPS was low, when EPS was less, P was high. When EPS is high, P is low. So this is confusing, and you will get more confused when you see the chart in TradingView. At present, EPS is high. EPS means earning per share. It means company is making more profit comparatively earlier. At present, company is making more profit. Fundamentally, company is more strong. Even after share price is not growing, share price is in consolidation phase. So how will how will you understand this thing? So now moving to our PPT file. What is EPS? Why is EPS is important? EPS, earning per share. Earning per share, just understand in this way. If we 10 friends start a business, okay, and we 10 friends all are shareholder, equal partner, and we have one share, each person one share. It means total number of share is 10, and company is making profit 100 rupees in first financial year. It means this profit 100 rupees is equally, when you divide 100 divide by 10 share, it means 10 rupees each. earning per share is 10 rupees each. It doesn't mean that you are earning this money. You will not get. Generally, company keep this money with him because and put this money for the growth purpose, for increase, for the improvement purpose of the company. So if he is making 1,000 crore profit, it doesn't mean that company you distribute it as a dividend. A small part of the profit company usually distribute to the shareholder, and big portion company utilize for the improvement. So why is EPS important? EPS important. With the EPS we can understand that company is growing or not, company is fundamentally growing or not, because it is connected with the fundamental. Earning per share, it means profit per share. When you calculate from the formula, this is the formula of EPS, net income minus dividend on preferred stock. At first, company distribute the dividend to the preferred shareholder. We all are not preferred shareholder. We are a common shareholder. So generally, company distribute dividend to the common shareholder later. At first, they distribute to the preferred shareholder. So net income minus dividend divided by average outstanding share, total number of outstanding share. You can calculate total number of share. How? You just from market cap, you have to divide from share price. Market cap divided by share price, you will get total number of share. And here you can divide in net income divided by outstanding share, and you will get EPS. With example, you can understand it. If total number of share is 1,000, profit is 15,000, it means EPS is 15,000 divided by 1,000. 15. Okay. Now we understand what is PE, price to earning ratio. Both are interrelated, PE and EPS. So P ratio measures a company's current share price relative to its per share earning. It means P ratio, this is the formula, share price divided by earning per share. With example, you can understand better. Share price is 1,500 and EPS is 15. Then P ratio will be 1,500 divided by 15. It means 10 rupees. So just understand from previous slides. Share price is in numerator and EPS is in denominator. It means if share price will grow and EPS is not growing, still PE will grow. Understand this line and you can note this line. Share price is growing rapidly, but EPS is not growing. P will also grow. This is called bubble, and you are going to trap in this company, in this share. So don't jump, because all are following the company, all are buying, and company is in news. So we should not jump immediately without doing research. EPS is not growing, it means earning per share is not growing, it means profit is not growing. So we should think why. Share price is growing, share price depends upon demand. This is the sentiments. P shows you the sentiments of the market, but EPS shows you the fundamental of the market, fundamental of the company. So once case is share price is growing and EPS is not growing, but your P will grow because this is denominator. If it will be less, definitely your result will be high. Second example, share price is growing and EPS is decreasing. This is drastical situation. It means P will grow. P will be higher and you are going to trap again. So you must be cautious about in this scenario. So you must see what is the EPS. EPS is growing or not. If EPS is not going, it means something is misleading or misguiding you. But one case is if share price is growing, EPS is also growing, and then P is growing, this is the very good condition. So just understand with this slides. In this trading view, you can understand from this. JS engineering, okay, share price is growing, okay. And if you search in screener.in, JS engineering, you see the chart, P ratio, select P ratio. EPS is growing, P is growing, share price is also growing. This is the very good condition. This is the very good situation. You can buy the share and you can hold this share because everything is good. Company is fundamentally growing. Sentiments is also good. It is in trending as well. So you can jump. But one case, you should also think about this. Yes, Asian Paint, a very big company, large company. You can see share price is not growing. It is in consolidation phase. And in screener.in, sorry, Asian Paints, you can see the chart here, P ratio. EPS is growing, but share price is not growing. Understand from here, share price is 1,000 rupees and EPS is 25. What will be the P? P will be 20,000 divided by 25. It means 40. And if share price is not growing and EPS is growing, at present EPS is 35. So P will be lesser. The same case with Asian Paints. Share price is not growing. Even after EPS is growing, P is not growing due to this reason. Share price is not growing, but EPS is growing. So P is not, P is going down. Why? If EPS earning is increasing, so share price should also increase. Why it is not growing? The reason is you can see here in the past. Here you can see EPS is less, but P is high. In this time, share price was also growing earlier. When EPS is high, share price is not growing, meaning investors are very brilliant at present. In this time, earning was not coming. Okay. Company was doing some capex. Company result was not coming well, but company was doing good. And in the investor in that time under thinking that company is doing well, company is doing capex, company is increasing their infrastructure, factory, everything, outlets. It means after some time profit will come. At present earning is not coming, So they start investment. Investor started their investment before result coming. So in that time, EPS was not good. Even after, due to investor started taking the position, so share price started growing. And if share price is increasing and EPS is not growing, P will also grow. P will also increase. Share price is, 1 minute. Share price is growing. It means 1,000 become 12,000, and EPS is not growing. EPS is same, but your P will grow. Your P will grow. Why? Because share price is increasing. This is the case. So when EPS earning started coming, but share price started coming earlier, due to this reason at present share price is not growing. It is in consolidation phase. So it means you should think, you should not jump because Asian Fund is very good company. EPS is very good, EPS growing, so share price will grow. No. In proportion of this EPS, share price is already increased. So if you jump because EPS is growing, then definitely you are making a big mistake. So what will be the good way? The good way is you should jump if EPS is growing, your share price is growing, and then definitely P will also grow. This is the best way to select a share or select a company. Thank you so much to all of you for watching my video. See you in the next video.